Guys, we got 1% declines, basically. Only one or two components of the NDX are green. Let's get to Bob Pisani. Good morning, Bob.
Good morning, guys. Has a little bit of a feel of a flush out. I say that because very heavy volume right at the open, 10-to-1 declining to advancing stocks. That's a very unusual number. Let's take a look at the sectors. And I want to point out something I think very important. I know everybody's focused on tech, but it's not the worst performer. Actually, energy and cyclical sectors, industrials and materials are doing poorly as well. This goes to what I call that peak reopening story that we've been talking about for the past few weeks, that this is as good as it gets. So focus on that for a moment. Let me just show you tech here. And mega cap tech, you know the story here. Mega cap tech is down 10, 12, 14, 15%. Apple's 15% off of its recent high. Microsoft, about that. A little bit more for the chip names. NVIDIA is probably 15, 16%. Some of the other ones like Xilinx, maybe a little bit more in the 20% range off of their 52-week highs. It's the thematic tech stocks that you want to focus on, of course. The Cathie Wood's ARK Funds, 35% off of its recent highs. Clean energy has been clocked. All of those clean energy ETFs, they're 35 to 40% off of their highs. There's Block. That's a Bitcoin blockchain ETF that's got a lot of those stocks like Galaxy in them. They're off about 30%. And finally, cloud computing, another sector off 25 to 30%. Let me put up some of those cloud computing stocks because we all like talking about Fastly and JFrog and Snowflake, PagerDuty, and they're great companies, but they don't make money. And so they're 50% off of their highs because there's a concern now about companies and whether they can make money. Zoom makes money, but even that's been down a little bit here. So 50, 60% off. If you look at the popular tech names, okay, the Cathie Wood's names, Etsy, PayPal, they make money, but they trade at 50 to 60 times forward earnings. That's a lot. Twitter will probably make a small amount of money this year. It's probably trading at 70 times forward numbers. You get the point. Pricing starts to matter when interest rates go up. High multiples really matter a lot when they go up here. As for the inflation worries, as Carl has pointed out, and listen to Carl, commodities have topped out. They've topped out several days ago, and so are the commodity stocks topping out here. They've had enormous run-ups. No 50% off with these guys. Freeport's up 90% this year. Newport, Devon, Apache, they're up 50, 60%, still up. So this is what I'm talking about, that peak reopening story here is just starting to come to fore with some of these big names here in the material sector. Pay attention to that. As for the markets where we are right now, I'm just saying squeezing out froth. We're 40% off the highs on the thematic tech. Mega cap 7 to 13% off. The reopening still strong but peaking. That's the key story right there. Still strong but peaking. And the Fed, well, they've said we're more concerned about employment over inflation. We'll see if that changes, but that's the primary paradigm the market's working with right now. Take a look at the S&P, 4056. That was the low a week ago. We're still 15, 20 points above that particular low right now. Based on 2022, Carl, we're at 19.3 multiple on 2022 numbers. We're below 20 for the first time in a while. And yes, the market is now tending to use 2022 estimates. So the market is getting cheaper right now. We are taking some things down, some of the frothiness down. And Carl, I view that as nothing but a good sign for the health of the market.
Shepard Smith here. Thanks for watching CNBC on YouTube.